Hi guys, Derek Ruiz here, apartment broker and expert with 37 years of real estate sales experience. And in this video, I want to talk about the two best ways to defer your capital gains taxes when it's time to sell your apartment building. The first method is to sell your building on an installment basis. Now there's two types of installment sales we're going to discuss in this video. Now the next method is to sell using a 1031 tax deferred exchange. And there's also two methods of exchanges we're going to talk about on this video. So let's get started. Come on. Okay, let's talk about the first strategy. That would be installment sales. So let me share my screen here. Okay, so deferral strategy number one, installment sales. The first type of installment sale is a seller carryback, where you carry a first note for the buyer. Essentially, you become the bank and will receive monthly payments from the buyer. However, this can be a risky option depending on the financial strength of the buyer. I don't recommend this for seniors or a lot of different clients, but it may be right for you depending on your situation. But the type of installment sale that I really like is called a qualified intermediary installment sale. You sell your building on an installment basis, not a cash basis. You sell your building, defer your taxes, and you'll still receive a lump sum of cash to invest as you like at the close of escrow. It has some similarities to a 1031 exchange, but you will not be buying another property. This is a good option, again, if you are more interested in receiving cash instead of monthly income. So let me show you a projection here. This is a qualified intermediary installment sale, pre-sale tax analysis, and money flow projection. So I take your information, I share it with the tax people, and they put together this analysis for you free of charge. This is for an actual client of mine. The sales price was going to be $3.9 million. Okay. So taking into account all the information, they came up with a tax bill of $973,000 on a $3.9 million sale. It's like 45% of his profit. So, excuse me, that's about 25% of his profit. So the total taxes due again would be $973,000, a lot of money. That would leave him with $2,692,000 after the close of escrow and after all his taxes were paid. That's a big chunk of money going to the IRS and franchise tax board. Now, if this client did the qualified intermediary installment sale, he would be walking away with $3,428,000, and he would be getting an extra $736,000 as opposed to paying his taxes. So this client's quite interested in getting another $750,000 in his pocket instead of going to Uncle Sam and franchise tax board. So we do these projections for anybody that's interested. I'll show you who does these. I don't do them. I'm a broker, not a tax guy. But let me show you the guy that does this. This would be Bruce Jones, founder and CEO of Tax Wealth. And he has been in the financial services industry since 1970. He's taught on tax management and financial strategy planning since 1974. This guy is the Kung Fu master of tax deferral and tax planning and investing. So anybody that comes to me that's interested, I send them right to Bruce. I do the analysis on the building, tell him how much it's worth, yada, 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 get him all the info. He crunches the numbers. He'll send you that tax analysis free of charge. Then if you still have interest, we'll do a Zoom meeting with Bruce. And we encourage that you include your CPA or tax advisor, financial planner in the Zoom meeting with me and with Bruce, so we can discuss your situation. Bruce can get your people up to speed on how everything works. And then you and your financial advisors can make your own independent decision if this is a good tax strategy for your situation. Now, some of my clients don't have CPAs or tax attorneys or financial planners, so we recommend that you hire somebody that has expertise. Let me give you an example here of somebody that we often use. Oops, and oops, let me stop that. Sorry about that. Okay. That would be tax attorney and CPA Jessica Monroe. She's one of the go-to attorneys and CPAs we send clients to for independent counsel and review of all the information. Again, she's an attorney and a CPA. She's familiar with the qualified intermediary installment sale. She's also a CPA that will do your taxes after the transaction's closed, so everything gets filed properly. She's one of several attorneys that I recommend my clients go to if they don't have their own counsel. So we have some really good tax professionals to help you guys defer your capital gains taxes. Okay, so let's talk about the second the second strategy we use for deferring taxes. That would be 1031 exchanges. Let me show you the doc here. Okay, so 1031 exchanges to a larger property. You're probably familiar with 1031 exchanges. A lot of people have done them. Maybe you have, maybe you haven't, doesn't matter. But it would be to another building or maybe a triple net commercial property. However, many landlords do not want more property. They want to get out of property management. They want to retire. So their goal is to get out of property management. So this is probably not the right option for a lot of people watching this video, especially if you're a senior. Now, the second flavor of 1031 exchange would be doing an exchange into something called a Delaware Statutory Trust, a DST. A DST is a special type of trust that allows for real estate ownership and qualifies for a 1031 exchange. A typical property is a new or newer commercial property, such as a shopping center or a medical building. Investors will buy a portion of the trust that owns the building. These properties are professionally managed and owners receive monthly rent checks. This is an excellent choice. If you want to sell, get out of property management, tenants, rent control, all that BS, but still receive monthly income. So let me share my screen here on a different document or different website. And here's one company that I work with, Kingsbarn Realty Capital. They're local in SoCal, but they're a nationwide company. They do the DST trust investments, and they have things like a KB Feather River Crossing DST. It's a grocery anchored regional retail center in Orville, California. Here's another one, a newly constructed grocery anchored retail commercial property in South Carolina. I actually had a client do a DST into this actual property in South Carolina. She's really happy with this. She went from a fixer duplex to partial ownership of this property, and it more than doubled her cash flow. So these are the types of things that people will do an exchange into on a Delaware statutory trust. Now, let me show you another document, and this is a portfolio allocation that was prepared for one of my clients who's going to be doing a 1031 exchange into one of these type of properties. So Kingsbarn Realty Capital, the guy that I know there, does these portfolio allocations to show you what your cash flow looks like if you do a 1031 exchange. So my client's selling a $2 million building. He's got $1.2 million in equity at the close of escrow. He's going to buy into this property about 10.54% of that building. And of his 1.2 million, he's going to get $72,000 rent annually from this property, or $6,000 a month. So he's selling his duplex in Venice. He's going to exchange into this property, and he's going to be getting $72,000 a year of income, which is incredible in my opinion. No more property management, no more rent control, super stoked. He can retire and get that monthly income. So this could be a good opportunity for you, especially if you want to get out of property management, defer your taxes, and receive monthly income from this DST commercial property investment. So these are the two investment deferral strategies: installment sales and 1031 exchanges. that are helping a lot of my apartment sellers right now, especially seniors. So if you have any questions, give me a call. I'll get the basic information about your property, and I'll send it off to Kingsbarn Realty for a DST projection. I'll send it off to Bruce Jones for a installment sale projection. So you can look at the numbers, share the information with your tax people, and determine if one of these makes sense for you. Now, you can always just pay your taxes and not have to do all this. That's up to you. And the last thing I want to say is this is not financial or tax advice. I'm not a financial or tax advisor. I'm a real estate broker. I sell investment properties, but I am just bringing you some tax awareness of your options that you have to defer your taxes. So I hope this was helpful. And again, if you have any questions or you want to get started, just give me a call, shoot me an email. I'll gather the information about your building and I'll send it out to the appropriate tax professionals. Thanks for watching. This is Derek Ruiz, eXp Realty Commercial. Thanks for watching.